Is this the end of manual trading as we know it?
Manual trading involves human decisions that is closely related with emotional involvement. Though we can't say automated trading is entirely successful and manual trading is entirely failure, yet it's true that 90% of traders encounter failure while trading on their own. Yes, manual trades generally make a way to buy and sell trading positions depending on the asset price movement. They carry out trades based on their own abilities. But why a large number of them still face loss at the end of the day?
With artificial intelligence now performing backtests in seconds, adapting to market conditions in real time, and executing complex trading strategies without emotion, many traders are asking the same question: are humans being replaced in the trading world? In this video, we'll break down how AI backtesting actually works, how it's impacting the trading industry, and whether there's still a future for manual traders. This is more than just a tech trend. This could change how money moves forever. Shift from human intuition to machine. For decades, trading was an art form guided by intuition, experience, and human psychology. A trader would spend hours studying candlestick patterns, reading news reports, analyzing indicators, and making judgment calls based on their gut feeling. It was hands-on, stressful, and highly emotional, but it was also incredibly rewarding when done right. However, as markets became more volatile and the need for faster, data-driven decisions increased, the weaknesses of manual trading started to show. This is where machines entered the scene. Today, artificial intelligence can analyze thousands of variables simultaneously. It doesn't need sleep, doesn't get emotional, and doesn't second-guess itself. Instead of relying on instincts, AI uses data, massive amounts of it, to identify patterns and trends no human could detect in real time. It's not just faster, it's smarter, more consistent, and always learning. Understanding AI backtesting. So what exactly is AI backtesting, and why is it such a game changer? Backtesting is the process of testing a trading strategy against historical market data to see how it would have performed. Traditional backtesting involved traders writing code or manually inputting rules into platforms like MetaTrader, NinjaTrader, or TradingView. This could take hours or even days, and often led to errors or false confidence due to small datasets. AI backtesting takes this to the next level. Using machine learning models like neural networks, decision trees, or reinforcement learning, AI can run millions of simulations across decades of historical data in minutes. These systems don't just test your strategy, they optimize it automatically. They tweak variables, adjust stop-loss levels, analyze correlations, and eliminate setups that show poor historical performance. The result? A high-probability, data-driven strategy that's fine-tuned for the current market environment. Some AI systems can even simulate different market conditions, bull markets, bear markets, volatile swings, news shocks, and see how your strategy would perform under pressure. This kind of stress testing used to be impossible or highly limited in manual backtesting. How AI is changing the trader's role. As AI becomes more dominant, the role of the trader is shifting. No longer is it just about reading charts and placing orders manually. Traders are now expected to think more like engineers, understanding data science, programming, and system design. But that doesn't mean humans are irrelevant. In fact, successful traders in the AI era are those who know how to combine human creativity with machine precision. The trader's new role involves overseeing the AI systems, ensuring the logic makes sense, updating data inputs, and understanding when market conditions deviate from historical patterns. It's about strategy design, not just execution. The trader becomes a strategist, a systems architect, and risk manager. And ironically, as AI automates more processes, the trader's understanding of fundamentals, sentiment, and macroeconomics becomes even more important in steering these powerful tools in the right direction. Can humans still compete? One major argument in favor of manual trading is emotional intelligence. Markets are driven by people, and people are irrational. Traders who understand crowd psychology, fear, greed, FOMO, fear of missing out, panic selling, can often anticipate moves before the data shows it. AI systems may miss these subtle shifts in sentiment. For example, a tweet from Elon Musk can trigger massive movement in crypto markets, something that no algorithm could foresee or interpret correctly in real time. Similarly, news events, sudden policy changes, or central bank statements often require human interpretation. Manual traders who can read between the lines sense panic in the markets and take action based on experience still have an edge, especially during black swan events or highly emotional market periods. The challenge is balancing this edge with the data-driven discipline that AI offers. Risks of over-reliance on AI systems. While AI seems like the perfect solution, it's not without its flaws. Overfitting is one of the biggest dangers. This occurs when an AI system creates a strategy that performs extremely well on past data, but fails miserably in live trading. It has essentially learned the past too well, fitting every peak and valley perfectly, but those conditions might never repeat. Another risk is data quality. If your historical data has errors, gaps, or bias, your AI backtest results will be flawed. Bad data in equals bad strategy out, and since many retail traders rely on free or cheap datasets, the risk of working with poor quality data is high. There's also the issue of market regime changes. AI models trained during a bull market may not perform well in a bear market. Unless your model is retrained frequently or includes multi-regime analysis, its edge can vanish instantly. And finally, there's a growing concern about AI crowding, where too many traders rely on similar AI strategies, creating predictable behavior in the markets. This can reduce profits and even trigger unexpected crashes when all the machines make the same decision simultaneously. Merging human insight with machine power. Instead of choosing between AI and manual trading, many experienced traders are finding success with a hybrid model. In this approach, AI handles the heavy lifting, data analysis, pattern recognition, signal generation, while humans make the final decisions or adjust the broader strategy. For example, a trader might use AI to identify setups, but apply manual filters before entering the trade, such as reviewing news headlines, checking for scheduled events, or analyzing volume anomalies. Others might automate trade execution but manually decide on when to turn strategies on or off based on current sentiment. This method offers the best of both worlds: the speed and accuracy of machines with the creativity, adaptability, and ethical judgment of human traders. It also prevents blind over-reliance on black box systems that you don't fully understand. Future of trading education. As AI continues to grow, the skills required to succeed in trading are evolving. No longer is it enough to understand candlestick patterns or Fibonacci levels. Traders now need to understand coding languages like Python, R, and JavaScript. They need to be comfortable with statistical modeling, machine learning frameworks like TensorFlow or Scikit-learn, and platforms like QuantConnect, MetaTrader 5, and TradeStation. Financial literacy must now include data science. Trading education is shifting away from price action alone and toward building quantitative models, training neural networks, and deploying cloud-based systems that can run 24/7. The traders of tomorrow will need to be part mathematician, part developer, and part economist. But the good news is, these tools are becoming more accessible. No-code and low-code AI trading platforms are emerging, allowing even beginners to experiment with AI-based strategies. The learning curve is steep, but the barriers are slowly lowering. Will AI replace traders completely? This is the big question. Will AI fully replace human traders? The answer for now is no. While AI is incredibly powerful, it still lacks common sense, intuition, and context. It doesn't understand sarcasm, it can't interpret breaking news with cultural nuances, and it doesn't know when the market is acting weird. It follows rules, and it learns based on patterns. But the markets aren't always logical or consistent. There will always be a place for human traders, especially those who can adapt, learn, and evolve alongside technology. The most dangerous mindset is one of resistance. Traders who refuse to learn about AI or who dismiss it as a fad risk being left behind. But traders who embrace it, use it as a tool, and continue to develop their own edge, those are the ones who will not just survive but thrive in this new era of financial markets. So is this truly the end of manual trading? Not entirely, but it's definitely a turning point. AI backtesting is revolutionizing the way we understand and interact with markets, and traders who ignore this trend do so at their own risk. The future belongs to those who can blend human insight with machine precision. If you found this video helpful or eye-opening, please make sure to like, comment with your thoughts, and subscribe for more deep dive content on finance, trading, and the technologies changing our world. Thanks for watching, and trade smart.